Ladies and gentlemen, hamjambo. My name is Dr. Robert Mugo. Welcome to my channel about financial literacy simplified. We have been talking about a series of taxation issues, and I want us to continue learning about taxation. The last time we interacted with you, we talked about allowable expenses or allowable deductions. Today I want us to talk about disallowable deductions. What are these disallowable deductions? These are expenses that a business has incurred but they are not recognized by KRA. So it will not help you as a business owner to reduce your business or your taxable profits. I'll give examples of these disallowable deductions. The first one, any expense that is personal in nature. An expense that is personal for either employees or directors will not be recognized for tax purposes. Remember, we said it must be wholly and exclusively incurred for the sake of that business. The next expense is what we call drawings. When you own a company and it is exclusively yours, you may find at the end of the week, you go, give me 50,000, give me 20,000, you go to spend. This will not be recognized by KRA as an expense. The best way to handle this is, as I said in the last classes or the last lessons, have the directors paid some salary. When you do this, the company will reduce its tax because salary is tax allowable. And also this director, because they are entitled to some reliefs, like personal relief, and shift relief, if there is pension relief, they will benefit from that. Another item that is not tax allowable, it is entertainment for either staff or directors that is not documented, that does not follow the company policy. Sometimes you have what is your human resource policy. This expense, has it been recognized as one of the bonuses or allowances that either the staff or directors are supposed to incur or are supposed to be paid, sorry. Another expense that is not tax allowable is any spending or any repair that is long-term in nature, that is of a huge amount, because this will be treated, it is capital in nature, and we talked about a business is also entitled to what we call capital deductions. Another disallowable expense is any fine or penalty that is for the directors or for the staff. Fines or penalties that are criminal in nature. You went, caused an accident. You went, you are surcharged because of hitting somebody or involving in fights, that one will not be recognized as an expense by the revenue authority. Though for professional aspects, let's say if I am an accountant and my judgment, I made a mistake in my judgment and made the company incur losses, for the revenue authority, that one will be recognized as a tax allowable, but now it is for the professional body to deal with me if I operated below the expectation of myself as a professional accountant. It is important that we understand about these tax allowable and disallowable deductions, because at any given time, when we are computing our taxable profits, we shall start with accounting profits. You add back disallowable expenses or disallowable deductions, then you less allowable deductions. That is what you will use to get to know how much tax does this business pay or does it need to pay. This is what voluntary, by what we call self-assessment, you will give KRA, or when KRA is investigating your business, what sometimes is called back duty investigations, they will get to know your category of expenses. What are they and what are they allowable or not allowable? It is good to be smart. It is good to use your knowledge to reduce your financial or your tax burden, and we shall all thrive. I wish to stop at that for today. We shall continue with taxation lessons. Go to my YouTube, to my TikTok, Facebook, Twitter, and Instagram. Enjoy your time.